Ladies and gentlemen, good day and welcome to the Max Ventures and Industries Q4 and FY22 earnings call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need operator assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sahil Vachani, Managing Director and CEO, Max Ventures and Industries. Thank you and over to you, sir.
Thank you so much and good evening, ladies and gentlemen. Thank you for joining us on the Max Ventures and Industries Q4 FY22 earnings conference call. I hope you and everyone around you are safe and in good health. Joining me today, we have our CFO, Mr. Nitin Kansal, Rishi Raj, who's our Chief Operating Officer, Rohit Rajput, who's the CEO of Max Asset Services. We also have SGA, our Investor Relation Advisors, on the call. The presentation and press release has been issued to the stock exchanges and uploaded on the company's website. I hope everybody has had the opportunity to go through this. To begin with, I'm very pleased to share that our lease rental income in FY22 more than doubled to rupees 373 million in FY22. The total leased area at Max Estates increased 35% year on year to 400,000 square feet in FY22. Just to give you an overview of how the events unfolded for the company during the year gone by, financial year 22 was a transformational year for the company, in which the company narrowed down its focus from multiple businesses, including specialty films, to a pure play focused real estate business. This was accomplished by divesting our 51% stake in the packaging films business for rupees 6.38 billion to the Topan Group. The company has received the first tranche of payment of INR 4.94 billion during Q4 FY22, and the balance INR 1.34 billion is expected to be received before June 23. We've always indicated that real estate would be the company's long-term focus area, and we are very glad that the company's entire focus, energy, bandwidth, and capital will now be dedicated to growing and scaling the real estate business. We expect to utilize the proceeds from the divestment of the packaging business to fund new projects which we have in pipeline and achieve scale in the real estate business. During Q4 FY22, the Board of Directors also approved the composite scheme of amalgamation, wherein Max Ventures and Industries Limited will merge with Max Estates Limited, the wholly owned subsidiary of Max Ventures and Industries Limited. Post the completion of the merger, shareholders of Max Ventures will receive one equity share of Max Estates for one equity share of Max Ventures and Industries Limited, and Max Estates will be listed on the Indian stock exchanges. The transaction is expected to be completed in 6 to 9 months, subject to necessary approvals. Max Estates Limited, as the name will also resonate better with the business vision, strategy, focus, and operations of the company. Within the real estate business, FY22 started with us having the commercial real estate business, and during the year, we announced our intention to foray into the residential business as well. The leasing in the commercial real estate business was impacted during the start of the financial year on account of the deadliest second wave of COVID-19. However, as the year progressed and the intensity of the pandemic reduced, the industry witnessed strong traction in leasing. At Max Estates during FY22, we achieved 98% occupancy at Max Towers. Leasing at Max House Phase 1 was initially impacted due to the second wave. However, as the intensity of the wave reduced, we were able to lease out Max House fully within a quarter. Both these projects have been leased at a significant rental premium to the micro market, signifying the excellent quality of product we have delivered and our organization's ability to seamlessly navigate the challenges and emerge stronger. Just to give you a brief outlook of the business, first and foremost, it has taken us a little bit longer than anticipated to close new opportunities, particularly in the office space segment that we had set out to do in FY22. While we have evaluated and concluded commercials for several opportunities, We had dropped a few of these, including unreasonable demands, legal issues with the land that we were looking to acquire. We believe that it is important and better for us to wait it out and have a little bit of patience rather than making decisions in haste and not acquiring the right or the legally appropriate land parcels. We have a very robust deal funnel working with a wide spectrum of associates. With real estate being the single focus of the company, we're very confident of FY23 becoming an inflection year for our company in the real estate business, with sizable deal closures both in residential and the commercial segments. In addition, we will also look to develop these projects in partnership with domestic or international institutional investors. Having demonstrated success with our initial commercial developments, Max Towers and Max House, both commanding significant premium to the micro market rentals, and also our first residential development in Dehradun, 222 Rajpur, which has also commanded a significant premium to the micro market sale prices. We are very confident to recreate and recreate the same in our residential real estate journey as well, and create substantial values for our customers and all stakeholders. With this, I will now hand over to Rishi for the detailed business updates. Thank you.
Thank you, Sahil, for the strategic overview. Let me now give you the real estate business updates. As Sahil mentioned, the commercial real estate business started on a weaker note in FY22 on account of second wave of COVID-19. As the second wave receded, the leasing market witnessed strong traction with large-scale leases signed across the country. As the market was recovering strongly, the country was again hit by the third wave of COVID. Thankfully, the third wave didn't prove to be a deadlier one and lasted for a short period of time. Pan-India, as per JLL report, Q4FY22 witnessed 11.6 million square feet of net absorption, a 113% increase on year-on-year basis. Post the third wave, the leasing momentum in the industry has picked up strongly, with offices reopening across the industries, including IT space. Most of corporates have now accepted that work from home only model is not a sustainable way of doing business. In our discussions, many are in fact back to the drawing board, planning to expand their office space, with strong hiring witnessed across the industries. FY23 has started with a very strong momentum in deal inquiries and is expected to witness 10 to 15% growth in absorption pan-India. Now, coming to Q4 and FY22 update. Let's start with Max Towers. Total leased area owned by Max Estates in Max Towers stand at 2.95 lakh square feet, which translates to 98% occupancy. We are in advanced stages of executing lease deed for remaining 2% of the space at Max Towers. Lease rental income from Max Towers increased by 12% year-on-year to rupees 79 million in Q4 FY22, while it increased by 76% year-on-year to rupees 302 million in FY22 full year. On a full year basis next year, we expect total lease rental income from Max Towers to be at INR 350 to 400 million. Moving on to Max House Phase 1. As Sahil mentioned, it is now 100% occupied with leasable area of 1.05 lakh square feet. Lease rental income from Max House stood at rupees 36 million in Q4 FY22, while for the full year it stood at rupees 71 million. As some units are still in the fit-out period, the full rental potential is yet to be achieved. On a full year basis next year, we expect the total lease rental income from Max House Phase 1 to be at rupees 150 to 160 million. The weighted average rental continues to be at significant premium to respective micro markets of both the office assets. INR 105 per square feet per month for Max Tower and INR 125 per square feet per month for Max House. Work on Max Square and Max House Phase 2 both remains on track and expected to be delivered by Q4 FY23 and Q2 FY24 respectively. And we have already started receiving strong traction of inquiries for Max Square at the back of proactive outreach and engagement with potential clients looking to diversify to Noida as a part of hub and spoke or deconsolidation strategy to be close to where the talent is. With very robust deal pipeline and several large lease discussions in progress, we are very confident of conversions in FY23 for Max Square. Now coming to the key initiatives or KPIs we plan to undertake in FY23 for Max Estates Limited. Number 1, obtain occupancy certificate for Max Square and subsequently for Max House Phase 2. Continue to build robust pipeline for leasing at Max Square. Close at least 2 growth opportunities, 1 each in commercial and residential. Conclude the merger of Maxwell with Max Estates. Build residential capability including people, processes and technology and get ready for launch in a residential space. Drive digital intervention to enhance customer experience, curate ecosystem of retail and F&B portfolio, and continue to invest in upgrading external infrastructure and community development, which are key drivers for us to command premium in the office space. And last but not the least, develop ESG capabilities across the organization. On new opportunities, we have not only continued to build on robust deal pipeline, but also progressed several deals in last 1 quarter from diligence to documentation stage. As of today, there are 4 deals, both in residential and commercial combined, which are in advanced stages of documentation, while several at the term sheet stage with commercial negotiations closed. With this, we are very confident of achieving above stated KPIs for FY23. Just to share an update on Delhi 1 project, there has been positive developments with several objections to the plan withdrawn and Noida being adjudicated as an operational creditor by the Supreme Court. This, we are very hopeful, will expedite the plan hearing process in NCLT in coming weeks and months. As we work out the finer details, we shall be more than happy to share the business updates with you all subsequently. Now, let me hand over to Rohit.
Thank you, Rishi. Let me give brief highlights about Max Asset Services. Our managed office offering, Workwell Suites and Max House Okla, which offers flexible office space to occupiers who don't prefer to have a long-term lease commitment, saves a huge upfront cost for the companies and saves them from the hassle of maintaining the office space. We've created a 200 plus seats managed office space at Max House Okla, which is 100% signed up now. We are extremely encouraged with the response, and we are looking forward to launching Workwell Suites at our upcoming projects as well, including Max Square. As a part of our Workwell philosophy, we continue to differentiate our client experience by adding more amenities like a fitness center, salon, an early learning center, shuttle services, badminton courts, etc. We continue to curate various F&B options to create a unique ecosystem for our clients to work well. We also continuously interact with our tenants to incorporate their interests and feedback to improve their experience. Our vertical pulse organizes events, sessions around wellness, sports, while adhering to COVID protocols in the last quarter based on various themes such as theater, health, well-being, and F&B. With an aim to uplift our assets with the best-in-class facilities and becoming more operationally efficient, we are deploying various digital tools across all verticals, such as parking management, lift management, amenities booking, visitor management, and air quality monitoring. I'm happy to report the revenue for Max Asset Services more than tripled in Q4FY22 to 103 million rupees, while for full year it increased by 87% year-on-year to rupees 239 million. We expect the business of Max to witness strong growth in FY23 as a high percentage are open and are expected to avail more of our services. Let me hand over to Nitin Kansal, our CFO.
Thank you, Rohit. Good afternoon, everyone. Before starting with the numbers, an important point to note is that until the last quarter, our financials also included the numbers from the packaging films business. As we exited the packaging film business, Q4 FY22 numbers are not comparable to the previously published numbers. Our Q4 FY22 results now only include the real estate business, Max Estates, and our managed office business, Max Asset Services. The previous period numbers have also been adjusted accordingly for a like-to-like comparison. Now let me give you the financial highlights for the Q4 and the full financial year FY22. The consolidated revenues for Q4 FY22 increased by 76% year-on-year to rupees 289 million. Consolidated revenues for FY22 increased by 51% year-on-year to rupees 1 billion. Let me give you a breakup of this revenue for FY22. The lease rental income from the Max Towers stood at rupees 300 million. Lease rental income from Max House stood at rupees 71 million. We were able to sell 5 villas in 222 Rajpur, which contributed to a revenue of 286 million. Income from the Max Asset Services stood at rupees 239 million. Other related ancillary income stood at 112 million. The consolidated EBITDA for Q4 FY22 stood at rupees 45 million as compared to an EBITDA loss of rupees 67 million in Q4 FY21. Consolidated EBITDA for FY22 stood at rupees 257 million as compared to an EBITDA loss of rupees 21 million in FY21. The consolidated profit before tax for Q4 FY22 stood at rupees 22 million compared to a loss of 119 million in Q4 FY21. Consolidated profit before tax, before exceptional items for FY22 stood at rupees 41 million as compared to a loss of 252 million in FY21. Speaking about our liquidity position, the gross debt for Max Ventures Industries for continuing operations stood at rupees 2.9 billion as of March 22. The cash and cash equivalents post receiving the proceeds from the sale of packaging business stood at rupees 4.7 billion. Hence, on a net basis, we are a net cash company. With strong cash balance and focused real estate growth aspirations, company is now in a much stronger position to execute new growth opportunities. I would now like to open the floor for Q&A session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on a touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Pankaj Jain with Mahavir Investments. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, I have 2 questions. Firstly, what can be the yearly rental potential from Max Towers and Max House phase 1?
The rental expectation, as was mentioned in the opening speech for FY23, we are expecting rentals in the range of 350 million to 400 million from Max Towers and a rental income of close to 150 million to around 160 million coming from Max House phase 1.
Okay. And sir, what about Max House Phase 2 and Max Square?
So, Mr. Jan, the phase 1 of Max House is done. The phase 2 of Max House is expected to be completed by Q3 of FY24, and post which we can have a realization of rental income. Max Square is expected to be completed by Q4 FY23, and we expect the lease rentals to flow in from FY24.
Okay. So currently, okay, got it. Thank you, sir. I'll join back in the future.
Sure.
Thank you. Our next question is from the line of Jigar Shroff with Financial Research. Please go ahead. The line for Jigar Shroff has been disconnected. We will proceed with the next question. So our next question is from the line of Raj Joshi with Ace Securities. Please go ahead.
Hello. Sir, thank you for the opportunity. Sir, is there any kind of problems we are facing to sign a new development opportunity?
Hi, Raj. This is Rishi. As
Operator request has been initiated. If you'd like to cancel this request, please press *0 again.
Hi, can you hear me?
Yes, sir, I can hear you now.
Okay. So as Sahil mentioned in his opening remarks, there were certain challenges while we had closed a few opportunities, particularly in commercial office space. From a commercial standpoint, there were certain issues that we faced as a part of the diligence with respect to title and other issues of the land or selling company we had to drop. Having said that, as we have also shared with you in the investor presentation on page 13, we have a very robust pipeline, and the best way to judge the progress is compared to last time to this time, we have progressed several deals other than what we had to drop from diligence to documentation, and there are 4 opportunities between Gurgaon and Noida, which is in advanced stages of documentation, which we are very confident to close in coming months. In addition to that, we continue to build a very robust pipeline, and there are several opportunities where we have closed commercials and signed term sheet, which gives us extreme confidence about conversion in coming months. And then finally, what I would say is just to repeat what Sahil said, from a prudence and just to make sure we judiciously use capital, we do not want to take hasty decisions and regret later. So we are being cautious with what opportunities we find, but with the pipeline that we have, we are very confident of closing it in coming months.
Okay. Sir, I have 2 more questions on the residential segment. So what size of projects you plan to develop in, and the size and what kind of potential revenue you are expecting?
So in terms of residential, let me answer that in 3 parts. Part 1, where we are exploring opportunities in Delhi NCR, in priority in Gurgaon and Noida, and the 4 opportunities in the documentation stage that I talked about includes them. Number 2, what kind of residential opportunities and the price segment? We are looking at group housing as well as you could say low to mid-rise developments. And from a price segment standpoint, this we are looking at anything between 10,000 to 15,000 rupees per square feet, which can put us into a premium bracket of 1 to 1.5 CR as a starting ticket size, going up to 3.5 to 5 crore ticket segment.
Okay. And sir, what kind of EBITDA we can expect from the same? EBITDA
So
margin.
we will hold our comment on that. It would be a bit premature for us to give projections on top line and bottom line at this stage. At the right point in time, we will come back and update you on the residential numbers.
Okay, sir. Thank you.
Thank you. Our next question is from the line of Jigar Shroff with Financial Research. Please go ahead.
Yeah. Sorry, I got disconnected. I have three questions. One is, Sahil mentioned in the beginning regarding that restructuring in terms of merger, because of which shareholders of Max Ventures would get 1 share of the new company for every share of Max Ventures held. So if you could elaborate a bit on it. My second question is regarding what is the net debt? I mean, you did mention, but I just missed the amount on the balance sheet of the company. And the third question is, I think in an earlier call you had alluded that FY20 you would look at the peak lease revenue approximately 150 crore. Am I right? That's it. Thank you.
Thank you, Mr. Shroff. This is Nitin Kansal. I'll go one by one.
Yeah.
The process of the board of Max Ventures and Industries has approved a composite scheme of amalgamation whereby Max Ventures Industries will get merged into Max Estates and the listed entity would be called as Max Estates. So in the process, the shareholders of Max Ventures will get equal number of shares in Max Estates. For every 1 share held in Max Ventures, the shareholders will get 1 share of Max Estates. This would be all for the promoters and the public shareholders both. It will be a mirror demerger between MVIL and MEL. The process is expected to take, since MVIL is a listed entity, it requires statutory approval starting from SEBI and ROC, and we expect this process to be completed in a span of 6 to 9 months.
So the activity, one Max Estates would be the real estate arm, and what would be the activity in the other company?
So the listed entity would be called Max Estates, and all the assets under Max Estates would be under an SPV of Max Estates. The entity Max Ventures and Industries will cease to exist. It will get merged into Max Estates Limited.
But both will be listed separately, is it?
No. What will happen is Max Ventures and Industries will get merged into Max Estates, and the Max Estates will get listed. The listed entity would be called Max Estates, and the Max Ventures and Industries will cease to exist.
Okay. So there will be only one listed entity.
Only one listed.
Procedural, I mean, for easier compliance, I guess.
Easier compliance, and it also helps us for a better focus, better resonating with the market participants about our business. And from a capital efficiency, when we want to move capital from one SPV to the holding company, we are avoiding multiple layers of corporate structure in between.
Understood. I was under the impression Max Asset Services is to be transferred to the other company.
No. Max Asset Services will become a subsidiary of Max Estates Limited.
Okay.
So the next question you had asked about the debt position. As of 31st March 2022, the net debt on the books of Max Ventures Industries is rupees 2.9 billion rupees. This is made up of 3 components. It is made up of LRD at Max Towers and Max House, and the project debt at Max Square. Currently, we are having a cash balance of 4.7 billion rupees with us. So on a net basis, we have a net cash surplus, and the company would have around 1.8 billion rupees of net cash surplus available with us.
Okay. So now net debt would be negative 180 crores, that is.
Yeah, we don't have a debt. We have surplus cash.
Negative, yeah.
180 crores. So I think you mentioned about mentioning about revenue of 150 crores. We in the past have not expressed an explicit number on the revenues. So the revenue currently what we are pursuing in the FY23, we are expecting to get revenue from lease rentals of Max Towers, Max House, phase 1, and the facility management, so asset management revenues coming from Max Asset Services in FY23. And going forward in FY24, we expect lease rentals on top of this to come from Max Square and phase 2 of Max House.
If I'm not mistaken, in one of the earlier calls you had alluded once Max Square is completed and Max House Okhla phase 2 is completed, FY25, when all the properties are leased, the peak revenue would be in the range of 150 crores. I'm under that impression. I think you did mention in one of the earlier calls.
So once all the assets which we have currently in the pipeline, once they lease, we would be moving to a revenue number higher. I would not like to give a specific number, but be much closer to the number which you're mentioning.
Okay. Thank you.
Thank you. Our next question is from the line of Akash Mittal, an investor. Please go ahead, sir.
Hi, sir. Sorry, I was just trying to unmute. Sir, can you hear me? I believe so.
Yes, we can.
Okay. Sir, I have been looking at the presentations for the last 5 quarters right in front of me, and I'm somehow surprised by the lack of execution on your growth pipeline. You have been doing a lot of business case assessment, negotiations, due diligence, but I don't think anything has materialized. Am I correct in interpreting this?
In terms of closure of a growth opportunities, that is still in pipeline. So you are right. Over last 5 quarters, we have had robust pipeline. The deals have progressed. As we said, candidly, we targeted to close one commercial opportunity at least in FY22, but that we have not yet closed. And as again in the opening remarks, Sahil mentioned, one of the challenges has been with respect to acquiring land which is legally kosher in Delhi NCR. So that has been one of the challenge, and we had to drop a couple of them because of those issues having closed commercial as a part of the diligence. So that is the case. Having said that, as I mentioned, and I'll just repeat very briefly, if you look at the pipeline, we have started sharing from last 2 quarters. What we report there are active deals in different stages. And what gives us a lot of confidence is in last 1 quarter, we have moved from diligence to documentation on 4 deals between residential, commercial, Noida and Gurgaon. And those are in advanced stages of documentation, and very hopeful that we will be able to deliver on our FY23 KPI of at least 2 growth opportunities. So that's one part of your response. I think second, Delhi one has been in the pipeline for quite some time, got delayed because of COVID and delayed hearing in the court. But again, there is a very good progress in terms of many objections getting out of our way, including the recent judgment by Supreme Court to adjudicate Noida as operational creditor and not financial creditor. With that, we are very hopeful that the planned hearing will get expedited, and we will see positive movement on that front as well. That in itself gives us 2.5 to 3 million opportunity of development. So that's where we stand. And finally, we just want to be a little bit more prudent and judicious with capital utilization versus investing in a deal which we may end up regretting and destroying value for stakeholders.
Yeah. So, sir, that's absolutely great to think on the lines of capital preservation. But see, my concern lies the down cycle for real estate has already passed. We were at the bottom 2 years back, 1 year back. At this point, the juiciest of the deals have gone away. What you would be chasing most likely are the deals which would be coming at a premium to you. Right. And that is where my concern around the ROC starts developing, that if you start into deals right now where the prices have already started moving up, what sort of ROC do you commit coming out of these executions?
I think excellent question. In terms of we missing out on opportunity, I'll rephrase that a bit. I think we have a lot of deal in pipeline where commercial and term sheet has been closed. Our endeavor, whether it is commercial or residential, as we have stated very transparently, is to deliver on an IRR which is in high teens, and we continue to hold that bar for ourselves. And we are very confident on delivering on those numbers basis what we have already in pipeline and where the discussions and negotiations are on from a documentation standpoint. So in several cases, the commercials have already been locked in.
Okay. And do we, like last quarter also you mentioned, we expect to complete at least one growth opportunity in one quarter. This time I'm seeing we are committed to 2 growth opportunities. So do we see something different in the next quarter?
We are very hopeful.
So I'm hopeful as well for the last 5 quarters. That's where I'm getting concerned now.
Yeah, we are very confident on delivering on that.
Thank you. That's better.
Thank you. Our next question is from the line of Shubhankar Oja with SKS Capital. Please go ahead.
Hey, hi. Thanks for this opportunity. So 2 of them. One, so basically on the merger part, so will Max Venture be delisted and be listed after 6 to 9 months, getting all the approvals? That's one. And secondly, what is our equity commitment for the upcoming 2 projects? How much of that has already been invested?
Good evening, sir. This is Nitin Kansal. In terms of Max Ventures will not be delisted now. There would be once we get all the regulatory approvals, post 6 to 9 months, at that point of time, Max Ventures will get delisted. And then Max Estates will get listed. After the span, there would be a period of 2 to 4 weeks when the share would not be listed.
All right. Okay.
Answered in terms of capital commitment for the 2 projects which are ongoing. For both the 2, Max Square and Max House Phase 2, for both the projects, the equity commitment has already been done on the terms of equity, and the debt has also been arranged to achieve the financial closure. So for both the projects, equity and debt, both the closures have been done.
Okay, great. Thank you so much.
Thank you. Our next question is from the line of Parth Vasani with KK Advisory. Please go ahead.
Thank you for the opportunity. I have a couple of questions. First one would be, do you plan to raise any funds for the real estate business?
So if I can answer that, currently we are sitting at a cash of $4.7 billion on our books, and we have another potential to raise close to $2.5 billion of rupees through LRD. So rupees in that. So we are not expecting to raise any equity at this point of time. Post deployment of this capital, we will explore ways.
Okay. So what can be the commercial portfolio size and the rental revenue for the company, say, after 5 years?
So we have stated that we are looking to do 1 million sq ft of residential and 1 million sq ft of commercial every year. So currently we have a portfolio which is close to 1.2 million sq ft, and going forward we expect this portfolio to have add another 5 million sq ft of commercial in the next 5 years.
Okay. The last and quick one. What can be the IRR return expected for real estate business?
For the?
Real estate. Residential business.
So residential business is what we are looking at, a number which would be closer to high teens for the residential business.
Okay. That's it from my side. Thank you.
Thank you. Our next question is from the line of Priyanka Shah with NM Securities. Please go ahead.
Thank you, sir, for the opportunity. I have a few questions. Sir, do you plan to venture into retail segment as well in the future?
Hi, Priyanka. This is Rishi. Again, an excellent question. Our strategy, the stated strategy is one region, multiple asset class, as a part of that strategy, we are focusing on residential and commercial. And as a part of residential and commercial-led development, retail will come in as a support to residential and commercial. In addition to that, on a select basis, we also will be exploring what we call multi-use or integrated development like we have in Delhi One in pipeline. So if you look at Delhi One, as a part of integrated development, we have got there 3.5 lakh square feet of retail. So as a part of integrated development, we will have retail component on select basis, but largely it is commercial, residential with support retail.
Okay. What is the current debt for Max Towers and Max House, and what is the average cost of debt?
So the debt for Max Towers, which is the lease into discounting, is around 80 crores. And for Max House, phase 1, the debt is around, which is up to an LRD, is around 40 crores. And the average borrowing cost is early 7%.
Okay. And can you give any update on our investment in the restaurant chain? Any plan to exit in FY23?
Rohit, would you like to answer that?
Yeah. Priyanka, the investment in Azure continues right now. What we've seen in the last few quarters is a strong rebound in revenue. We've seen linear operational costs. And at the right time, we will look to monetize this investment. Can't commit on a time frame right now.
Okay. Thank you so much.
Thank you.
Thank you. Our next question is from the line of Chaitanya Deepak Shah with Silverite Capital. Please go ahead.
Hello. Hi, am I audible?
I think not clear.
Hello. Am I audible?
Yes, you are audible now.
Yeah. So my first question is, regarding. I was reading the presentation in one of the pages. You've written that most of the supply in commercial real estate in the NCR region is for strata sales. And I mean, I just want to understand, given what part of the real estate cycle we are in, it looks like we might have bottomed out a couple of years ago, and we are in sort of an upcycle. Why are people or corporates not going for outright purchases, and why do they prefer leasing? Because I think you still make 7-8% on real terms if you buy the asset, right? So just wanted your thoughts on that.
Yeah. So again, I think interesting question. In our discussions, we are in discussions with all large corporate occupiers. There are a few who would like to invest and earn the yield, as you rightly said, 7 to 8%. But a large portfolio of clients. Let's take an example of ITES, which accounts for 40 to 45% of leasing that happens pan India. And it's very straightforward for them. They are not in the business of investing in real estate and earning a return on real estate. They are in business of providing IT and ITES services. And that's the single most and the most important reason for them to leave real estate management, which is a very cyclical business, to the experts like us and others pan India to manage real estate investment and focus on the business they are in. That's the single most reason.
Right. So you think this trend is here to stay, irrespective of the kind of yields that are offered?
Absolutely. When you talk about leasing pan India in top 7 cities and grade A occupiers, that trend is here to stay.
Right. All right. I also want to understand more on the revenue number of Max Asset Services that was achieved this quarter. I think it was around 10 crores. So, broadly, if you can, let me know what is the exact business of Max Asset Services, and what should we expect from this particular line of business in the future?
Hi. So I'll come in with comments to your question. First, I think let me talk about the line of business and what you can sort of expect. And second, I will request Nitin to comment on the specific numbers portion. I think for Max Asset Services, the multiple lines of business that we're running, the main one is property management, where we run the operations of the building and create client experiences that we hope will wow them and drive a greater stickiness, a greater loyalty to our product and our offering. That constitutes right now the biggest portion of our revenue. The second part of the revenue comes from various allied services. They could be tenants wanting us to do fit outs for them. They could be tenants wanting us to do project management for them for their interiors. They could be tenants wanting us to do managed offices, some ancillary services because they're an ecosystem. That's the second part of the revenue. I think in the years to come, while we have these core lines of business around property management and various services that clients demand, we will continue to grow along with our clients, where as they come into our portfolio, various services and various offerings that they need, if it makes a business sense for us to deliver it to them, we will deliver it to them. I hope I've answered the first part of your question. I will request Nitin to come in for part two of your question to talk about understanding the numbers a little deeper.
Yeah. So thanks, Rohit. So the revenues which we have at Max Asset Services, the rupees, and that 239 million, has comprises of primarily two elements. One is the facility management income which comes from Max Towers and facility management income Max House. The second part of the income would be the managed office space, the workwell suites which we are operating out of Max House. And as Rohit also mentioned, we are the managed when we are doing fit outs for the clients, then the service charges for that is also part of the Max Asset Services.
Right. Understood. And in the presentation, you've also mentioned that you are looking at workwell suites outside the Max properties as well. So if you can elaborate, what have you thought there? And generally also, what is your vision for workwell suites? Are we just going to concentrate them in Max properties, or how do we, sort of integrate them in other commercial properties, like you hinted in the presentation?
Hi. So Rohit here, let me address that. I think right now, because we're in the early stages of this business, we want to focus primarily on our properties because we feel both as a developer and as an operator of managed office, it's a great synergy. It gives our tenants a flexibility of options when they come into our properties to go from taking a few seats all the way to actually growing to a much larger size in our portfolio. And, from time to time, clients will have teams that will be hiring at a short notice. So it's a great add-on and an amenity within the building. Second, because we're within our buildings, we can control the ecosystem and the experience to a far greater degree than we would in a third-party asset. And hence, the differentiation we can create in the mind and the eyes and the experience of the customer is far greater. So definitely as an amenity, it's going to be a part of all our projects on a case-to-case basis. We may take some different calls. Going outside of properties, we want to be very careful when we underwrite it. Try and do deals where the asset is top-notch and where the client is top-notch, and there is very little speculative risk on the table. And we will evaluate the case.
Okay, all right. And I just have one last question. You've given a few highlights about hybrid work and how corporates are thinking about it. Isn't this going to reduce the number of people coming to offices and hence the space required? I mean, how are you thinking about this? Because it looks clear from your presentation itself that the number of people coming to office are going to be far lesser.
Yeah. So again, I would just want to qualify my response with the fact that it is an opinion at this stage. What we are seeing is that, at least in our numbers and the larger trend in the market is, people are taking flight to quality. It's not necessarily shrinking down their office footprint. They want to maybe relocate to better buildings. They want to allocate, in many cases, we've seen greater square footage per person. So far, in our opinion, even if companies want to, take measures to shrink their footprint, it augurs well for category A+ developers like us, which are managing their own buildings, as well as it is auguring well for us because they're budgeting for a greater footprint in square feet per person.
Okay. All right. Thank you so much.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to
Thank you.
management for closing comments.
Thank you. Thank you everyone for your time, interest and patience to understand our business better. I hope we have been able to answer most of your queries. We truly look forward to your participation in the next quarter. If you have any further queries, please feel free to contact SGA, our investor relation advisors. Wish you very best and very good health. See you soon. Bye.
Thank you. On behalf of Max Ventures and Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect.